Hey there, YouTube family. Today we're talking banks versus Bitcoin. The battle is absolutely heating up right now. Which is a better safe haven for your money? First, we had Silvergate Bank failed. Then SVB blew up. Third, Signature. And now the contagion has spread to Europe with Credit Suisse in crisis. Over at First Republic Bank, there's lines out the door of depositors desperately trying to get their cash out. It was 5 big banks in crisis last Friday, and now it's 20 in just the last 2 weeks. Where is this heading? Well, there's a lot to unpack and a lot of very shady events happening behind closed doors. Yet again, there are politicians working to protect their biggest donors, and we know how this story ends. We did it all back in 2008 and 2009. It's going to be you and I picking up the tab once again. There is a serious problem brewing in the banks, and trust me, it isn't close to over. How is this going to impact Bitcoin and crypto, and what do you need to know right now? I'm going to break it all down. Thanks for hitting the like, subscribe, and the all notifications YouTube bell. Remember, there are scammers in the comments section. They use my picture and my name. They try to get you guys to contact them on WhatsApp and Telegram. It's not me. At the end, I'm going to give you guys my prediction as to what the Fed is going to do this month on the 21st and 22nd at the next scheduled FOMC meeting. Right now, we have the Swiss government offering Credit Suisse a $54 billion bailout to prevent them from a meltdown. Over at First Republic Bank, I've heard the board is out looking for a buyer. All banks are under the pressure of the Fed's hawkish rate hikes, but not all banks are going to be a sell. I'm also going to give you guys banks that are emerging as winners right now. But first, why did this happen? It happened because all the banks are insolvent. That should be alarming to you. What does that mean exactly? It means that they have invested all of the cash that you deposited and they took on more risk than they should, and the politicians allowed them to do it. Let me explain. Banks take your money and they invest in something to give you a yield. They typically buy the safest thing, which is U.S. Treasury bonds. But then the Fed started raising interest rates, and he did it very, very quickly. We were sitting at a 0% interest rate when this all began, and we have skyrocketed since. This has caused bond prices to absolutely collapse, which means the bank's bond portfolios have fallen apart. One of the number one assets in their portfolio would be the US 10 or 20-year Treasury bond. And if we look at that, we can see that it has collapsed 50% in price. It means that 50% of the value of your deposits has been lost in this current economic environment that inflation and the Fed has created. You need to stop what you're doing and take this seriously. If you have money in a small regional bank, it's not going to receive those bailout funds. Your money isn't there right now. It has been lost. Some will argue that this is FUD. I'm spreading fear, uncertainty, and doubt. And the truth is, it is not. These are facts. The banks don't have depositors covered. And if we suffered a moment of fear and panic right now, any bank in America that got targeted could absolutely fail. And the U.S. does not have enough money on their balance sheets to bail them out. The bailout was a bluff to calm everybody down, so there wouldn't be a panic run. That's why they did it. This is so important for you to hear. I want to read this article. The Fed's operating losses become taxpayer losses. The Fed is on track to post its first annual operating loss since 1915. Yes, over 100 years. We are absolutely definitely in a unique crisis moment. This is the first time in over 100 years that the Fed has lost money. Annual loss is estimated at $80 billion. And this cash loss does not count the massive unrealized mark-to-market securities portfolio that they hold, which is speculated to have lost $1.2 trillion in value since the rate hikes began. And the Fed is losing money every single day by paying banks this reverse repo program that they've initiated. So how is a broke Fed going to bail out the banks? Well, they're going to have to fire up the cash printing press, which is going to restoke the flames of inflation, which we've been talking about for the last couple years, is at a 40-year high, and it also could cause stocks to rise. We pay these guys to keep the economy under control, and their own budget is essentially tore up from the floor up, as they say. It is more important than ever that you understand your money and you make sure you have yourself positioned for success. You cannot afford to be dependent on the government as they continue to lead us back to the same bad places over and over again. On the 21st and 22nd, we've got the next FOMC meeting, and there's a lot of speculation as to what the Fed will do because it absolutely is going to move the markets. We could rally or we could crash based on his next step. The market expects 2 more 25 basis point rate hikes. And some have argued that with this bank pressure, the Fed should give the banks a little relief and not raise at all at the next meeting. But others have argued that that could actually signal fear that the banking situation is way worse than anybody truly knows. So even though the rate hikes are squeezing cash value out of the banks, I think the Fed will likely raise the 25 basis points so as to not panic the markets. But of course, the adverse effect of that is that as he continues to raise the rates, it's going to lead to more bank failures. Some people don't know that the SVB Bank and Signature Bank lost $300 billion in value, which was the same amount of money as the top 20 banks that failed in 2008, including Lehman Brothers. The financial system is in just as much trouble as it was then, and the stakes have only been risen in the last decade. For perspective, Credit Suisse, which is on the chopping block, has $578 billion in assets. But again, they don't have it. If there was a full audit, they might be lucky to have half of that in real value. So the $56 billion that the Swiss government is offering isn't even close to covering deposits. Credit Suisse default swaps, which is insurance that investors can purchase on their bonds, is 18 times higher than their closest competitor, UBS, which means that they have priced in failure already. Credit Suisse has come out and said it for themselves in their recent financial report. They use the term material weakness. The material they're talking about is cash. The weakness they're talking about is they don't have it. And of course, this led to the Saudi National Bank, which is Credit Suisse's largest shareholder, announce that they will not extend Credit Suisse any more credit. Now, have you guys ever been somewhere and you had your debit card declined? Well, that's what just happened to Credit Suisse. They were out on a hot date with their depositors, and the waiter walked over and said, "Sir, we have a problem. Your card has been declined." When the Saudi National Bank was asked if they would in any circumstance reconsider lending more money to Credit Suisse, their exact words, and I quote, were absolutely not. Credit Suisse stock is down almost 98% from all-time highs, and personally, I consider it worthless. Credit Suisse is one of the 33 banks that are globally marked or ranked as systemically important. Of those 33 banks, China has 7 that are listed as systemically important of those 33. That, again, is another picture of how the money and power in the world is consolidating into fewer hands. In addition, it has been reported that China has been quietly removing their funds from Credit Suisse. Guys, the run on the bank has already begun. You're just going to be the last one notified. It's been confirmed that U.S. regulators informed investors in Israel to get $1 billion out of Signature Bank before shutting them down. And where does that lead us in regards to Bitcoin? Bitcoin is a natural winner in the midst of all of this financial crisis. And as we move further along the accumulation phase and towards the next halving event for Bitcoin, I think that Bitcoin is positioned to continue to move up. Now, I think a fair target right now for Bitcoin is around 28K. I think it's actually quite likely. Having said that, the economy is in trouble. We have a possible financial implosion at any moment if the Fed made the wrong decision. It absolutely could cause Bitcoin to crash along with every other asset. To be clear, in the near term, I'm seeing things go higher, barring any major black swan event that might crash the markets. And at some point, I do see Bitcoin backtesting 18K. And you need to be thinking about that right now because it's going to have a very negative effect on your favorite altcoins. They will likely crash. The good news is this is going to be creating another buying opportunity, not at the highs, but back down at the lows. So consider taking profits if we get to a 28K Bitcoin and perhaps hold cash, wait for a crash. In just a moment, I'm going to tell you the banks that are going to emerge winners in the days ahead. But before I do, if you need better trade tools, check out this offer from the Moomoo investment app. They're giving away up to 17 free stocks for opening and funding your account. Click on the link in the top pinned comment to get all of the details of this exclusive and limited time offer. I use Moomoo every day. All right, which are the banks that are going to thrive? I think it's going to be Morgan Stanley, JP Morgan, and Bank of America. That is not a complete list. I'm sure others will do well. I happen to like those 3. Warren Buffett's favorite stock is Bank of America. I think all of them are positioned to become much bigger in the coming days because we're seeing a consolidation in banking through this event. There's going to be failures. These banks are going to step up and buy these smaller banks at a ridiculous discount, and they're going to grow market share like crazy in the next couple months. I've heard some argue that this is by design, and it's a strategic move to position the government as well as a handful of the largest banks to survive and control approved CBDCs, which are centralized bank digital currencies. Check out this article. Too big to fail banks rake in deposits after banks fail. In addition, Jamie Dimon admitted in an interview that he was literally on the phone actively soliciting big depositors, seeking to entice them over to his bank in the midst of the crisis, which meant that if these large depositors pulled their money out of the regional banks, it would surely cause a bigger panic, but in the end, Bank of America, JP Morgan would be bigger. Bank of America reported that they have already raked in $15 billion in deposits in the aftermath of these bank failures. Of the three, you guys know that I like BAC, Bank of America. Currently, 2834 is the critical technical level that it needs to hold, and in my view, it appears that that level will hold. That would be the right place, though, for a stop loss moving forward. I think when we get further through this crisis, I think that we're going to see Bank of America climb, and I think the price target ahead of us is going to be at least to the $32, $33 range in the near future. The trade absolutely favors going long at this level that we're sitting today. Let me know in the comments what you guys think about the banking crisis. How concerned are you about your money right now? Are you in one of the big banks or are you in a regional bank? Let me know in the comments. Thanks for hitting the like and subscribe. Peace and blessings. I'll see all of you guys in the next video. I'll leave one more thought at the tail end here. Micro leans bullish with a postponed crash ahead. I'll explain more of my thoughts on that in the next video. Take care.